The most important thing for any crypto investor long term to understand, I think, is the regulatory treatment, the political status of every single crypto asset. And you got to start by defining what's a cryptocurrency, what's a crypto property, what's a crypto security, what's a crypto platform. And as far as I can see, Bitcoin is a crypto property. And by property, it means it's viewed as a fair, common piece of property beyond the control of a company or a group of individuals. It has to be pari passu to land or soybeans or gold or food, some commodity. In order to create a crypto property, it's pretty challenging, right? The Bitcoin story is Satoshi disappeared, the coins never moved, from January 3rd of 2009 to like May 22nd of 2010, the price was like a penny, less than a penny. On pizza day, it's a couple of pennies or something. There's no pre-mine, there's no ICO, there's proof of work. It's a fair distribution. There's no yield. I think it's pretty clear that of everything in the crypto universe, the thing that is most likely to be deemed property in any given nation state is Bitcoin. And I think we've seen that. I think that you've then got a handful of other cryptos where you could debate whether they are property or not property, and it goes on for a while. And the best claim would be the Bitcoin forks. And then you move on. You've got an interesting story of ETH, very interesting story, and then you've got all the other crypto coins. I think that I'm very sensitive to this because I've been a public company CEO since 1998. So I know the securities law reasonably well. Probably I know it better than most anybody in the crypto industry because there aren't very many crypto companies that have come public. Right? If you go public and you live through that and you understand public securities laws that revolve around everything you can and cannot do, what you can say, what you cannot say. For example, if you parse everything I've said in the past 18 months, you will not see me utter ever that I thought that you should buy MSTR. I have never endorsed my own stock. I've never uttered an opinion of my own stock. You can go on Twitter and, you can trash, MSTR to the cows come home. I'm not going to defend it. I'm not going to say anything. I have no comment. Securities are a different creature altogether than property. And I think that if you look at Bitcoin, it is the dominant digital property network. The other forks, Bitcoin Cash, Bitcoin Satoshi Vision, they're less than 1% now. If you have a similar property network, if it's global non-sovereign store of value, if that's the use case, if that's the design, which is what Bitcoin is, then I think information theory, the law of thermodynamics, the law of marketing, the law of politics says all the energy tends to collapse into the dominant network in that space. Classic business strategy says that whatever your market is, you need to dominate that market, whatever it is. And if you can bring the overbearing amount of assets to bear in a given market, you'll crush everybody else. And there's one winner. The only way that you can win if you don't have that overwhelming support is you have to segment the market. You have to find a very different segment for which you can be the best solution. The thing that's powerful about Bitcoin, which makes it a solution to a $250 to $500 trillion problem, is we have perfected a crypto property, at least one, in cyberspace. And the monetary policy of Bitcoin is pretty much set in stone on pizza day. If you roll the clock back to May 22nd, 2010, it was like, we're going to issue this much Bitcoin between now and 2140, and we're going to run off of transaction fees for the next 1,000 years. And if you were to say to me, Mike, what is the monetary policy and how's the network going to work for the next 1,000 years? I can credibly describe it. And if you said, do you think it's going to change? No. Like, it's not that there isn't some risk. Like, an asteroid can hit the Earth and your ranch land in Kansas will be worthless property, right? I mean, heck, I can sell you land in Florida and it can sink in a swamp. So there's a tsunami that can wipe out your beachfront. So there is risk in property, just like there is risk in Bitcoin. But with good faith, I can say to you, I think I know the monetary policy. I don't think anybody can change it. I can't change it. I have no intention to change it. And so that's what makes it useful for $500 trillion worth of companies, insurance companies, governments, banks, to use this as what? As a foundation for a balance sheet. The distinction that I make, I think it's helpful, is you've got a portfolio. Let's say you have $100. What portion of it is a savings account that you want to save for 100 years? 10 years at least, a long time. That portion you want to save in strong property. In an inflationary environment, if you're going to save money for 30 years, you either got to buy land or some strong property, and Bitcoin, I think, is the strongest property. And you decide what. I mean, I respect any decision. You want to buy art, you want to buy land, you want to buy trophy assets, you want to buy something that'll hold its value for 30 or 40 years. You do that, you're a saver. It becomes pretty obvious if you live in Argentina and I told you the currency is going to lose 75% of its value in the next 12 months. If you're switching from the peso to the dollar, you're just a saver, right? You're not an investor.
Yeah.
It looks like an investor or speculator, but you're not. You're just converting from weak to strong asset. There's another part of your portfolio. You're an investor. Okay, you're taking risk. Like, is Apple better than Peloton? Is it better than GameStop? Is it better than ETH? Is it better than Solana? Is it better than Uber? They're all just different ventures. You're taking a venture and you got an investment. Just, I think my view there is just you deserve to understand what you're investing in. If you're investing in a public company, you can read my 10K and you can see who owns it. If you're investing in a private company, maybe you can. If you're investing in a crypto project and you don't know who controls it and how many there are, right? You're at a disadvantage, right? So the friction comes from, are there fair disclosures as to the risk you're taking? And then the third category is speculation. So when you're betting on Puppy Coin 3, the sequel, or like Sailor Moon Coin. I can't believe there's a Sailor Moon Coin, but I really can't believe there were two.
Apparently, Sailor Moon Coin's up 300% during this episode because you said it twice.
Yeah, maybe. I don't doubt you, but so. And by the way, it's like just for the record to be straight, I don't begrudge people the ability to speculate on whatever coin, and I obviously don't have a problem with you investing in whatever you want to invest in. I personally am a public figure, and I only choose to articulate and advocate and educate on Bitcoin because I believe it is the what I'll call ethical safe haven for a public figure. If you're investing in property, I'm giving you lifestyle advice. My lifestyle advice is trade your weak currencies for strong currencies, get a place to live. If you have excess funds, it's good to have a home that you can live in the rest of your life. That's lifestyle advice. Control your destiny, right? And lifestyle, I would say macroeconomic political advice is, all things considered, if you can own a piece of property that doesn't get taxed 2% a year, if you buy land in Florida or a house in Florida, you do get charged 2% a year. That means over 100 years, you're going to pay 200%. You're going to pay more. You're going to pay 500% over 100 years because they're going to appraise the value of the property up and charge you 2% of the appraised value. So I just give common sense advice, which is, if you're going to have the property stripped out of your hands in 10 years because of inflation and taxation, that's not a good saving strategy. find something you can hold for 30 years and maybe give to your children. And if you don't have children you want to give it to, something you can hold to live on. And if you don't need that, something you can give to your favorite charity, right? Make the world a better place. I know there's a risk an asteroid will hit the Earth. And I know there's a black swan risk, and maybe, demons come down from hell above or heaven below or whatever, and they screw with Bitcoin. I get it. But all things considered, you're going to lose 90% of, your money over the next 24 months if you're in a hyperinflating environment by doing nothing. So my view is, if you're guaranteed to lose 90% of your assets to do nothing, then you might as well do something. And it's like I say to people on Bitcoin, it's like, you don't like Bitcoin? You think it's 95% likely to fail? Okay, then only allocate 5% of your money to it. Right? Yeah, if you think it's 99% likely to fail, then you might as well put 1% of your money in it, right? So I think that people oftentimes, they don't get their risk right. There is a risk to doing nothing. And the risk to doing nothing in a monetary sense is the monetary inflation rate.